2, 3. One, two, three. 1, 2, 3. 1, 2, 3.
All right. Did everyone hear me? Okay, I just want to ask you a few questions here. Who here has started an ETF before? You guys can raise your hands too. All right, who here wants to start an ETF? Crypto, right? Yep. All right, well, we have a great panel here, and they're going to walk you through how to launch an ETF. So I'm just going to start with introductions on my left. First, we have Andrew Channon, from co-founder of Procure Holdings. Then we have Jeffrey Sardinia, who's the vice president of State Street Global Services. We have Julia Stoll, who is the senior account executive at McMillan Sullivan Communications. And then we have Jeremy Senderowitz. Thank you very much, Jeremy, with Deckert Law Firm. So we have legal, marketing, PR, we have custody administration, and issuer, and then we have Andrew, an issuer and a marketing expert. So I think we've got all the bases covered. And so what I thought would be fun to do is, I have a great idea for an ETF. It's called the hockey stick ETF. So guess what? The revenue does a hockey stick. And so we're going to invest in companies that have hockey stick revenue streams. So we're just going to go down in this panel. We're going to talk about, first of all, legal. Then we're going to talk about custody administration, then PR, and then Andrew's going to fill in all the gaps. So Jeremy, I'm launching a hockey stick ETF. I have an SMA that's been following this strategy for 10 years, and I want to launch an ETF. And what are the first things I should consider on my hockey stick ETF?
Sure. Thanks, Mike. And for purposes of this example, I'm going to assume that you've got an SMA, but you're not currently in the registered fund business, that you don't have mutual funds or closed-end funds, because the answers can differ a little bit if you are already.
Okay.
So it's great that you've got this SMA with a track record.
That's right.
Yeah, so
can I use the track record?
It depends on what you want to do with it. Like the lawyer's favorite answer. It depends.
Yes.
Yes. The answers are probably not as much as you'd like, but
that's been my experience as well.
Yep. So when you want to get into the ETF business, there are really two words that the lawyers will tell you to keep in mind. First, the regulatory, and second is infrastructure. Because especially from the perspective, some of this is ETF specific, and some of this is general to whenever you're getting into the registered fund business for the first time.
Right.
So just to start from the pure regulatory standpoint, 2019 was an amazing year for the ETF industry. In that it's literally never been, as we speak now, it has literally never been easier from a purely regulatory standpoint to get into the ETF.
So that's the ETF rule you're referring to.
We've already talked about the there have been a lot of talk already about the ETF rule and how now the ETF rule is technically in effect already, especially for a new entrant who doesn't have old exemptive relief that it could rely upon.
So if I was to jump forward here a little bit and say, I'm setting up an RIA to launch this, right?
Yep, you'll need an RIA.
And then I have my track record, and then I'll set up an ETF, and you'll handle the regulatory filings for me for that.
Right.
And then we'll lead with, what, a 12B1, a 19B?
Well, hopefully you won't need that.
Okay.
In that, depending on the strategy, you'll need a registration statement to be declared effective by the SEC, and that's a relatively in and of itself. That's a relatively straightforward process. Usually, for a registration statement itself usually is 90 to 120 days.
That's right.
But a big driver of that is not from the regulators per se. It's about getting the right infrastructure into place for you to be declared effective.
And then, Andrew, what are the partnerships I'm going to need to really get rolling here? Am I going to...
So there's a whole bunch of partnerships.
Non-transparent active, so there's a lot of partnerships I'm going to need, right?
Is that the route that you're going?
Yes, non-transparent active.
Okay.
Why didn't you say so? That's a whole other answer.
So non-transparent and active, you'll need to figure out which one of those types of wrappers you're going to want to use.
Okay.
We're seeing that there are several providers out there.
That's right.
We are, my company as well has an IP arm, and my partner Bob Tull himself has actually been working on his own non-transparent active, which will be getting refiled later this week.
Really, you're wading into those waters.
Yeah, we've been trying to get into there, and now that the Alice rule is there, it allows for a lot more opportunities.
Okay.
So there's a handful of wrappers that you could choose if you want to go non-transparent active. But really, one of the big things that you'll want to figure out is, do you want to launch it on your own? And like you said, you have an RIA already.
That's right.
Do you want to be the advisor to the fund? Do you want to be the portfolio manager to the fund? Do you want to build out all that infrastructure that was previously mentioned? Or do you want to work with a company that already has a platform and infrastructure set up? Many people call that white labeling.
Right. Okay. And then, Jeffrey, let's say if I wanted to launch through State Street, what would be the steps I would take as well?
So I guess first off, just to level set, from my role at State Street, we're on the ETF administrator side. So think of your custodian, your accounting, your ETF servicing, all the boring stuff that nobody wants to do. Our main role is really to educate, get the trains running, and keep them running on time.
So do you work with white label issuers, or you handle everything yourself?
We work with various label issuers, doing a lot of that back office work and a lot of the education work. So I guess if you're looking to launch an ETF, really historically, the first conversation you're having is with someone in my seat. We're coming in, we're educating your organization, we'll let you know how the ecosystem's different from what you're used to, some of the things to look out for, some of the introductions you want made, some of the things you need to think about before you really make that decision to launch a product. Once you make that decision, then we'd really start, from a State Street perspective specifically, we'd really start your pre-launch through launch process flow. And I'm happy to talk a bit about that if I have a little bit of time.
Yes.
To go through that. So I would say initially, from a pre-launch perspective, let us come in, let us educate your organization. Secondarily, let us make the introductions you need. Let us work with you on the nuances about the different products. I have some bad news, some good news, right? Bad news is every ETF wrapper, every different type of ETF within a single wrapper, they all have nuances and they all work slightly different. The good news is that you have firms who can help you guide through that. A lot of them are up on this stage, and the launch process flow operationally is consistent across all of them. So I'd say let us come in and do that education, and then most importantly, leading up into, I would say, your infrastructure's in place, whether it's us supporting infrastructure or you building that infrastructure. Lastly, let us get through a model office process, which is really an extended dress rehearsal, which this mic is awesome, guys, sorry. Extended dress rehearsal throughout, where we're real, yeah.
So you're running the product. And
in a real life environment at real times, and doing everything that would happen from seed through post-seed and putting in predetermined testing steps that you want, and making sure that by the time you're seeding a product, launching a product, and ringing that bell, that you've had the opportunity to see this in real life, feel your way through it in real time, and make sure everybody's comfortable that what we theoretically wrote up on your whiteboard in your offices over many of those times actually works, you're comfortable with it.
So I know with seeding and picking a lead market maker, there are a lot of steps, Andrew, that you take through. And my former company, ETC, we would take care of the seed. Is there anything that you recommend for folks, or like is there a way that you kind of recommend you should start with additional seed beyond just what's required from the legal standpoint?
If you can get seed for your product before you launch, that's fantastic, and you're starting already above many other products that launch.
I would almost argue that you have to have seed at this stage of the game.
Well, I hope you're wrong, because I've never started with more than the minimum seed.
Okay.
And I think I've had some successful products and hope to have many more. That said, we do have some products, one that we have actually gone effective in the other week, and right now we're actually here in the process of raising that seed capital, because we think for certain products, it might actually be more important to have that seed out of the gate.
Right.
Right. And I think part of it is depending on how integrated you are into the industry and how many times you've been through the process. That also helps, just because you've been through this before.
But you did bring up the point of lead market makers. So
Right.
lead market makers back in the day would be your first call to see if they would seed your product, and that no longer exists. They don't want to have money tied up sitting out there if the product isn't a success and it isn't trading, because that's capital that they could allocate somewhere else. So they want to know that you're going to be able to have a product that's going to be heavily distributed, that you're going to support and be behind marketing nonstop so they could get out of that seed. But they also want to know that this product is something that's going to be tradable for them. I actually came from the lead market maker background for my first job, and I actually got to experience some of the pain points from the market maker. So when I'm creating a product, one of those end users that I'm considering is not just the final retail or institutional investor, it's also how that product is going to be designed so that market makers are going to want to participate in it.
And then, Jeremy, are there any specific legal requirements when you're doing an AP agreement or a LMM agreement that we should know about?
Well, the AP agreement is generally pretty standardized, though if you're doing a non-transparent active product, there may be some tweaks, especially if you are using the Presidian model. And there's an AP representative involved.
Right.
That's something that's getting finalized right now, and hopefully by the time you get into the market, there will be standard forms so as to minimize the amount of negotiation you have to do on that.
That's a great point.
Right.
Yeah.
So just generally speaking, the question of infrastructure and partnerships is very key because it depends how much, it really dictates how much you have to put into place yourself.
Right.
Like if you partner, as Andrew describes, with one of the what are called white label platforms, then they'll provide the board and they essentially give you a package of service providers that you don't really have a choice in. And there are certainly efficiency benefits to doing that, especially if you are, say the hockey stick idea is really your main idea,
Yes.
and you don't intend to really try to come up with a lot of additional products.
Okay.
For that, then it might not make as much sense for you to build out the full operational and compliance infrastructure on your own. But if you have ambitions of really becoming a big player in the ETF space, then
Come on, of course we have more ambitions than
right,
just one
then
fund.
it probably makes a lot more sense for you to maintain control of your brand and your own destiny.
That's right.
And build and identify your own board, and that takes time.
Okay. And so, Julia,
Yep.
I want to go to the New York Stock Exchange. I want to bring the New York Rangers in, and we want to have a nice big launch. What are the things we need to think about before we go ahead and do that?
Well, before we even get that far, we like to recommend getting PR involved 60 days out.
Okay.
Ideally, you have everything lined up with the rest of these guys up here, but really crafting your message is the most important thing you can do to create and
So,
start a
as
fund.
your client, would you sit down with me and we'd work on the messaging?
So we would work on messaging. We would, identify who might be the spokesperson, make sure
Okay.
that they're media trained, make sure that they know how to express the message and share it efficiently and coherently with everyone in the media. So making sure that you're comfortable with when the launch comes or when we're sending up embargo calls, which are in advance.
So for the group here, what's an embargo call?
So an embargo call is when you set up something with a reporter, say we want to get ahead of a launch. Say the launch day is March 15th, and we want to have stories that come out March 15th ready to go right as the fund starts to launch and trade. So we would reach out as a PR, on behalf of the client, we would reach out with an embargo press release.
So if I say I want to be on the Wall Street Journal, Barron's, all the ETF products, you're going to reach out to them for me and just make sure they have the press release in advance so that on the day of the launch, it's all ready to go, right?
Exactly. So we would identify the key embargo media targets.
Okay.
So kind of the top tier who you really would want your fund coverage, and you may or may not get it, but we like to set up as much as we can in advance so that they have the media wants a heads up as well. They'll know when something starts trading, and so if we can get ahead of that and get phone calls.
So I'm going to be on Squawk Box the day of launch, right?
We'll keep your expectations.
No,
But,
that's not realistic, just so you know. I'm just having fun.
Yeah. So essentially, what embargo means, it's a closed conversation, and that they can't put anything out there in the press until the embargo is lifted. So if there's a certain time and date of trade, then they can go out with the story. But we try to set things up in advance so that there's things ready to go on the launch date. People know that the fund is live. There's
okay,
chatter.
so the launch has happened. There's been some great media coverage.
Yeah.
What's next?
So this is really important for us, and I think it's very overlooked by a lot of ETF issuers that come out and they're basking in the ETF new fund glow, and there's coverage and people are talking about it. But of course, it's going to start to die down a little bit, and you want to keep that conversation going with the media. You want to make sure that you continue to be a thought leader in whatever your specific area is, or whether it's the spokesperson, identifying what makes you different and keeps you standing out. And keeping those relationships is really important.
I just want to ask a quick question of the whole group. Anyone have a good example of like a really bad press release, or some things that you've seen that people want to say, but you're like, well, you really can't say that.
Well, from a lawyer's perspective, any bad press release is something that goes out too early. And that obviously Julia's firm and others are very sensitive to these concerns, but from an issuer is pretty severely limited in the PR that it can do before its registration statement goes effective.
Right?
So you got to be careful about that. And
so what is too early?
Before its registration statement goes effective. So sometimes you'll have specifically some type of delay between when it goes effective and when the fund actually launches, so that it can have a full PR effort.
And normally with the launches I've worked on, it comes effective on like a Thursday and we go live on a Tuesday. So let's say I wanted to get it out, have the press release go out the night before the launch, I could actually send that out at 5 o'clock or 8 a.m. or 7 a.m. before the 9:30 launch. Is that correct? As long as it's effective.
Generally, the exchanges will generally require that you send it out during non-trading hours. So you want to because otherwise there's a concern about whether or not that affects the market and they have to stop trading for a minute. So that's why press releases usually go out after market close or before market open.
That's right. Okay. All right, Julia, any other points that we should know about post-launch?
Yeah, I think one other aspect of what's really important is content and continuing to push content, whether it's blogs, short pieces, social media, email newsletters, those types of things that PR and marketing or whoever is responsible for putting those together can help with. And that's important to continue to get the message out there, continue to get the story told.
That's right. And a lot of the clients that we've worked together on, they'll have a weekly email, they'll have the lead spokesperson on Seeking Alpha, and they'll post things to that account. And there'll be a constant flow of digital marketing and other things that are out in the to the target audience of both retail, allocators, and institutional. Yeah. Now, Andrew, I remember hearing about you for the UFO launch. What did you do for that launch specifically to gain some interest?
We worked with our PR firm and we let them reach out to all the media outlets out there. We lined up a pretty big day. I can't go into all the details. There's some proprietary stuff about what was done, but I had some fun wearing an astronaut costume for some of the day and got to parade around Bloomberg in that, so that certainly grabbed some attention.
Yeah.
I think you have so many times in an ETF's life cycle when something is newsworthy or there's a way to bring the story to your fund or try to get your fund when there is a story associated with whatever is going on.
That's right.
And I've tended to focus on thematic types of products.
Okay.
So talking about space, it was the 50th anniversary of the lunar landing. So trying to get ties in with that. And really you want to continue to hopefully build up your thought leadership ability and positioning so that when a media outlet does want to cover some story and they want to cover the investing angle, that they're able to consider you in that conversation. I think I'm not saying everyone should create thematic ETFs. I'd actually love if none of you did, so that hopefully I could carve out some more of that space for myself before it gets even more crowded.
Well, you want to be known as the expert, right?
But it's good to also be able to know that there is something that whenever there's a space story, it's something that we can also get involved in that conversation.
That's
so
right.
Having a way to tie in your story is very important, and doing things that stand out and differentiate yourself even that much more so important.
Right. I remember I worked on the Jets launch, and we did this great research piece on 100 years of flight and tried to tie it into Boeing. And and really get that type of publicity, and it's good to have those types.
And that kind of comes back to the PR thing. Is we're always looking at what's going on in the market, what people are talking about, and if there's something that makes a product relevant, and you can go, oh hey, this news came out, Google made an announcement, here's a way that you can capitalize on that, and
That's
get
right.
a fund out there. Or if you want to talk with someone who's been looking at this space for a long time, another way to pitch them and get them back out there with the media.
So Jeff,
We went from I have an idea to we listed and we're doing PR relatively quickly. So I just want to take it back just for 1 second and at least give the folks a couple things to think about. Keys that we've seen at State Street over years of servicing clients and launching products that are some of the areas that we've seen firms either do and be successful or completely skip and struggle a bit. So I'd say a few of those key items would be look internally at your internal teams. Make sure you have some ETF experience on those teams. If you can hire more than one, fantastic. If you can't and you have the resource for one, I would say likely you'd want to look at an ETF capital markets side of the business.
What are those groups? I mean, you want to have a good, strong PM team, right?
Correct.
You want to have administration covered. You want to have a marketing group. You want to have a sales team or a sales function. Is there anything else within those categories?
I think that's where I'm. It works. It'd be awesome. So where I'm trying to go with it is an ETF is a mutual fund in a different wrapper, right? So PM, you can use existing PM teams. That shouldn't change. It's really having the folks internally that can hold all of this together, talk with your sales, support your internal teams, have someone who I can face off with industry-wide, and really wear multiple hats for you. And if there's any cap markets people in the room, I'll take free drinks starting at 5. Okay. If you can't hire, that's okay too. Make sure that you have someone internally that can focus on this. There's a steep learning curve. It's steep hockey stick example that you have to get through and make sure you get there. So I'd say that's one. I'd say the last two quickly, and it bleeds into your sales, I'd say is perfect your product. Not everything works in an ETF wrapper. If it's not really successful in a different wrapper, there's no guarantee it's going to be successful in this wrapper. So really think about that. Think about the capacity issues of your strategy, etc. I would say look at your sales team. Think about how to educate them, comp strategies, really perfect that narrative because it is way these tracked is different than traditional mutual funds. So 3 things I would probably write down if you had to write down any.
Okay, and I think what I've done here is I've added in sort of keys to success that we've agreed as a panel are some of the things you might want to focus on. And the other thing, Andrew, I don't know if you want to comment on this as far as what do you think are the 2 or 3 things you need to have when to be successful.
You need to have everything. You can't just specialize in one thing and expect it to work.
That's right.
Back in the day, you could launch an ETF, and if you launched it, they would buy it. And those days are gone. You need to be able to be out there and support it. If you think that it's got a great name or a great strategy, and just because of that, it's going to be a hit, that's not enough. And you said hockey stick. I think an important thing too that we didn't really get to discuss much is that back to the regulatory side, I've gone through many times where we wanted to do a XYZ fund, and that's the name of the fund because that's what we think that we're providing for investors. And then the SEC says, well, tell me why that's XYZ. We're not going to let you call it that. And then you have to make the decision, how important is that name? Do you work with building out the index, or do you working with the SEC and going back through many rounds and rounds of comments so that they are comfortable with you using that name? But the names rule is something that's there.
So it's a little promissory, right?
There's been a fund that we wanted to do as a drone fund, and that became the Drone Economy Strategy Fund. When all the blockchain funds were coming out, none of them were called the blockchain or cryptocurrency ETF. They had to bastardize those names. And us to get the Procure Space ETF approved, I think we had 7 rounds back and forth, and finally we were able to show all that criteria. So that's something that you might not think about, and if the name is something that's important or that theme is, and you have to sacrifice maybe the integrity of what you're doing, you might want to consider that as well.
Yeah, and the other thing that we've done, and I know Julia, you've been involved in these conversations, we use the ticker as the brand as well. So like EMQQ, that's the ticker and that's the brand. And that also is a way to get around some of these issues with the SEC as well.
Right. I just want to throw two last points in there about infrastructure. One is that compliance infrastructure you'll need some, regardless of whether or not you're partnering with a white label platform or you're doing it all yourself.
Okay.
There are some type of outsourced solutions where you can say get a fund CCO through an outside provider, and they can help you also draft your compliance policies and procedures. But you can't outsource everything.
Right.
You need to have that. The second thing is that if you have your own board, excuse me, if you have your own board, no rule book will tell you this, but don't underestimate the importance of maintaining a strong relationship with your board. You'll need people, or at least some senior person, for whom board relationships is a major part of his or her responsibility.
Right. And we've learned recently the importance of an independent board, right?
Yep.
And having a strong team on an independent board.
Yep. And especially if you're looking to grow yourself from a startup into a major player in the ETF industry, you need to have a strong partnership with your board.
That's right. Yeah, because if you have the right board, they can really help you from a strategic standpoint, and it's really important. So, other things that we've put together as we were talking about here, I'm going to flash up a few things to think about from keys to success on the pre-launch. These are all the sort of boxes you need to check as far as making sure everything is covered. It's pretty much explanatory. And we'll have these slides to distribute afterwards. If you're interested, we'll send them to you. If you just come up with a business card, we're happy to send them to you. And then this is also being streamed live as well. So this is also available for download. So on the pre-launch, Andrew, Julia, you want to kind of pick out a few of these that are going to be really important?
For me, one of the things, when you create any type of product, people want to know that you do have some type of expertise, and we talked about board expertise and things like that. For us, we've found a lot of confidence working with index providers that happen to know these areas inside and out, and being able to go back when, especially in thematics, someone will say, well, to me, this company should be in it, or why is that company in it when I don't think it should fit in there? And what you have to do is be able to go back and stand by your product, which is supposed to be tracking an index. So if you can go back to your index provider, and maybe they're an expert in that field, and be able to go to them and take these questions that are coming and come back with very strong supportive answers, it makes your product just that much stronger. So I think having some type of expertise in whatever your product base, whether it's existing business line or aligning yourself with those individuals that can help relay that story and bring credibility. Our space index was the first ever certified space data product by the Space Foundation.
Right.
Something that no other index has had.
Right.
And it's been able to show that there is some understanding that this represents space in a way. So I think lining up with experts beyond just your board is a way to certainly help you and get your message out.
Right, and I think bringing up the index providers is very important because we've all worked with index providers. They really have created the foundation for this business, this industry that we're in. Jeff, Jeremy, any stories around index providers and how you've either there was an issue with something where you're integrating it, but trying to launch that we should think about or can learn from?
I wouldn't say any issues. What I would say is as you're going through, and index-based products are important, with the ETF rule in 2019, really you have some flexibility around sampling, around customization. So it's less, for at least interactions with us, it's less about the index provider. We integrate with all of them. We're happy to work with all of them. We hope they're all successful. It's more around how sophisticated do you want to be, how much flexibility do you want to have, and can we get your infrastructure and our infrastructure connected to make that a reality?
Yeah, I think as often happens, if you've got great war stories, you can't really talk about them. But but I think it's obviously very important to make sure that you're watching the index closely and if there if there are issues that you see, that you raise them right away.
Right.
In terms of whether or not you think there's an error either in calculation or just in terms of administering the strategy.
And then on rebalance, I know that a lot of my clients spend a lot of time making sure what they're getting from the calculation agents are correct and they're not missing anything. So you also have to make sure you're doing all your due diligence and don't always assume it's correct. Julia, anything else? You partner with the exchanges, the index providers?
We try to have relationships with all of the aspects of it. If, not necessarily working side by side, but having communication, working with an exchange, if we're going to do a bell ringing, making sure we're helping liaison and coordinate all the details needed for that. Working with the issuer to make sure that, they have their key messaging going for anything that they may be doing with, their partners. So making sure that the cohesive story is to be told by all, and making sure that everyone is good to go from the start and has their key points and what differentiates them is really the key to getting out there and having a strong launch.
Well, great. Well, time's up. I want to thank my panel. I think you guys did a great job. And thank everyone. If you have any questions, we'll be around for a few minutes.
Baby, I'm playing on you tonight. Hunt you down, eat you alive. Just like animals, animals, like animals, moles. And maybe you think that you can hide. I can smell your scent for miles. Just like animals, animals, like animals, moles. Baby, I'm so what you trying to do to me? It's like we can't stop, we're enemies. But we get along when I'm inside of you. You like a drug that's killing me. I cut you out entirely. But I get so high when I'm inside of you. Yeah, you can start over, you can run free. You can find other fish in the sea. You can pretend it's meant to be, but you can't Baby, I'm playing on you tonight. Hunt you.
Ladies and gentlemen, welcome back to the exhibit hall stage for a session on new metrics and strategies for emerging markets and ESG. I'd like to welcome on stage Danielle Rutsky, ETF Capital Markets Specialist at DWS, and our guest, Perth Toll. Over to you, Danielle.
Good afternoon, and thank you all for being here. I'm Danielle Rutsky, and I work at DWS as an ETF Capital Markets Specialist. And I'm here with Perth Toll. I'll be your moderator for our chat. Perth Toll founded Life and Liberty Indexes, and so let's just jump right in. Perth, can you tell us a bit about the unique freedom weighting methodology that your indexes use?
Sure. So freedom weighting. 1 second. Give us a second, guys. Oh, thank you. Sorry about that. Okay. So freedom weighting is basically an alternative weighting method for emerging markets, alternative to market capitalization weighting. So with market capitalization weighting, as you guys know, you get a very heavy weight to the biggest markets like China. China actually is 34 to 38% of your MSCI and FTSE emerging markets indexes. So any products based on those will have a huge concentration to a country that has a lot of geopolitical risk coming up in the future. So what we do is freedom weighting, and basically what that means is the freer countries get a higher weight in the index. The less free countries get a lower weight, and the worst offenders as far as human and economic freedoms are excluded altogether from the index. And the ETF that's based on the index is FRDM.
That's awesome. Can you elaborate on the investment rationale for this?
Yeah, so freer countries, if you look at history, and we look at the very long term, so if you look at the course of history, freer countries have typically been more dynamic and less free countries more stagnant. Freer countries tend to grow more sustainably, they recover faster from drawdowns, and they use their human and economic capital, or their capital and labor, more efficiently and have less capital flight and capital destruction. So in the long run, they should be more, should have a premium over their less free peers.
Interesting. So going back to the process that you were mentioning earlier, through that, what countries become included and which ones get excluded? And can you touch on why?
Yeah, so the biggest excluded country is China, and that one tends to takes the main stage because it's got so much weight in the other indexes, in the market cap indexes. And as MSCI adds more A shares, it's going to just become even bigger part of the indexes. So China, Russia, Egypt, and Saudi Arabia are not included, and those are kind of notable ones that are not included in our index. Saudi Arabia also notable there because MSCI just added them as well, and it's not one of the smaller countries. So Saudi Arabia in your MSCI or FTSE indexes will have more weight than some very free countries like Poland and Chile. So those are the most notable excluded countries. The included countries, the highest weights are to Taiwan, South Korea, Chile, and Poland. The fact that we have high weightings to Taiwan and South Korea gives us very high correlation to the market cap weighted benchmarks. So it's kind of acting as a China proxy without actually being in China. And those are highly free markets in their regions.
So you launched Life and Liberty Indexes in May of last year and already attracted $15 million. So how did you come up with this idea, and who was your first investor?
Yeah, so our first investor, so the index has been around for 2.5 years,
okay.
But the ETF has only been around since May. And our first investor was Rob Arnott of Research Affiliates, and he is also an investor in the company. So interesting story about him is how I met him is I've always been interested in freedom weighting, so an alternative weight to market cap. And since he did fundamental weight, which is an alternative weight to market cap, I've always been a big fan of Research Affiliates. And I used to work at Fidelity, so I was in the Fidelity Pasadena office. I was an advisor at that time. And I would literally go and stalk the research affiliates building, just like walk past it, because we were on the same street, because I was such a fan. So when I left Fidelity and started this company, I called research affiliates and I said, hey, do you guys want to partner together on this idea? And they were like, please go away. So, so I didn't actually get past any gatekeepers. But that first year, when I first decided to do this, I came to Inside ETFs, and this was 2015, and met someone here who was interested in what I was doing and had me speak at a couple of CFA societies that he was the president of. I spoke at these very tiny 20-person CFA societies in Tennessee, and they recommended me for a CFA society in Tampa to do their forecast panel. So I was on this panel, again, my first year doing this, no idea what was going on, with a man named David Kotok, who I think is speaking here this afternoon, myself, BlackRock, and Morningstar. After the panel, David Kotok invites me to this thing called Camp Kotok, and this is where 50 economists go fishing in Maine, in this remote area, like almost in Canada, with no Wi-Fi for 4 days. And I go to this thing, and I decided to take a seaplane the day of. I was doing meetings in New York, and I called from LaGuardia and said, hey, is it too late to get a seaplane? The seaplane company says, no, you can share a seaplane with Rob Arnott. So that's how I ended up meeting Rob Arnott. We ended up fishing at the camp. He jumped on a call with me after camp, and after the call, he told me that he would be the first seed investor, and his investment has grown since then. That was 2016, and so he is now very involved in what we're doing. Although, I mean, he's not, very involved in the day-to-day, but he is an investor in the company and in the fund itself.
Great. Data is becoming a bigger and bigger topic. Where do you get the data for these indices?
Yeah, so the data for the indexes, as with any kind of index, it has to be quantitative, it has to be objective, it has to be robust. And so we get our data from the Human Freedom Index data set from the Cato Institute, the Fraser Institute, and the Friedrich Naumann Foundation out of Germany. They have a joint project where they quantify, they come up with a quantified score for 162 countries based on 79 different metrics of human and economic freedoms. And I break them down into 3 categories: the rights to life, the rights to liberty, and the rights to property. So rights to life are things like terrorism, trafficking, torture, disappearances, internal organized conflict. Rights to liberty are things like your rule of law, metrics like freedom of speech, freedom of media, freedom of the internet, freedom of foreign media, and so forth. Freedom of religion, right? Freedom of assembly, those types of things. And then property rights are your rights to, or your economic freedom. So those are like taxation, private property rights, business regulations, sound monetary policy, and freedom to trade internationally. So they take 79 such metrics, and it comes up with a single country score for each of 162 countries, and we just take the emerging set of countries out of those.
So also, I wanted to touch upon the current feud between Marco Rubio and MSCI, as the senator is urging the index provider to keep U.S. investors from investing in China. What is your view on this?
Yeah, so Marco Rubio, recently wrote a letter to MSCI saying, hey, do you guys factor in any human or economic freedoms, or just actually, I think he just said human rights, into your decision, along with a bunch of other things. And of course, MSCI said no, because they're not wrong, because they do market cap weighting, and that is the industry standard. So they're not acting outside of industry standards at all. And while we are, as freedom indexers, do not believe the government should interfere in private market activity, and we don't exclude any country arbitrarily, just we exclude China based on their freedom scores. We understand his concerns, and we believe we've addressed them in a free market solution.
Great, thank you. So just to wrap it up and looking forward, what is your long-term outlook on freedom as it seems to be declining in certain parts of the world?
Yeah, so freedom does seem to be on the decline, and in the short term. But if you guys look at the long term, throughout the course of history, we've always been on a march toward more freedom. And even though in the short run there are a lot of challenges, especially in emerging markets, even now in developed markets, we see some challenges. And that doesn't go away in the short term, but in the long run, I think as a society and as a humankind, we're moving towards more freedom as a whole. But one of the things that concerned us, we launched this in the middle of the trade war, in the middle of a lot of emerging markets challenges, and as freedom was clearly declining globally. And one of my board members, as I was getting ready to file for this ETF, said to me, well, that's what makes it more important, so file. And so just because freedom is on the decline around the world does not negate its benefits. And we've created this for people who believe in the benefits of freedom to be able to express that in their portfolios.
Great, thank you so much. Well, I look forward to hearing much more about freedom indexing.
Thank you. Do we need to bow?
Oh, yeah.
We decided to come back in case...
No worries. Is the microphone on? I don't hear it.
Mic's on? Okay. We decided to come back in case anyone had any questions. Sorry, I forgot that part. Yes.
It's a very interesting presentation, and I happen to work in the field of single country ETF investing. My question is, it's a philosophical one, but it's also practical. We all know what happened when Germany was going through hyperinflation in the 1920s and 30s. They were excluded by the investors of the day from the capital markets. And we all know what happened in Europe, how many millions of people died. My question is, do you think that if we exclude China and other countries from the from your investment universe, that you would cause anti-Westernism, so to speak? They would just say, you know what, forget about you. We'll just do whatever we want to do, and militant nationalists will come to power. Thank you.
Yeah, so just to make sure I understand the question, you're asking if we exclude countries, does that cause more problems as far as, within the country itself, as far as anti-Western sentiment and views?
Right. If your views become more prevalent,
yeah,
and people in China, people in Russia, people in Saudi Arabia, people in all of these excluded countries, they learn about it. They say, you know what, you don't accept us, we don't accept your views. Yeah. So it's kind of, it causes division.
Yeah. So this is a known ESG debate, right? Should we engage the companies? Should we be active investors in ESG? And you're asking, should we be engaging these nations instead of not investing in them? And again, we don't exclude any countries arbitrarily. We just use the data, the freedom scores. And as soon as they become more free, we look forward to the day that China, Russia, Saudi Arabia are all in the index. So we have nothing against those countries. We just use freedom weighting. But the question is, should we instead invest in them to help them become more free? I think we have been doing that. And, there's certain, incentives that something like this could provide for those countries, that if they want the investment dollars from people who, believe in the more freer markets and freer people, that they should open up and make improvements in their human freedom and economic freedom policies. I think China has made great improvements over the last 30 years. I mean, undeniable. But if you look at their index, so like Shanghai Composite Index over the last 10 years, it's been flat. Foreign investors haven't taken part in that growth at all. And they've grown tremendously. So a lot of that growth in the unfree markets can get diluted for foreign investors because they don't have the investor protections. So the growth gets siphoned off to other players. So for foreign investors, I think it's more beneficial for us to be investing in the freer markets. And I don't know that whether we invest in them or not in part of our indexes, makes any difference as far as to their decisions, as as far as their policies go. Yeah. Yes.
Do you see any correlation between the countries in your index and how they look at innovation and efficiency versus the ones that have less freedom?
So have they been more innovative and more efficient? Yeah, so the freer markets do tend to be more flexible to market trends and more innovative and more efficient. We do also exclude state-owned enterprises. So we believe that private enterprises are more efficient than state-owned enterprises. For example, there's a company in Chile called SQM. It's a mining company, and they used to mine a lot of copper. But when the electric car revolution, became a thing in China and around the world, they, switched to mining lithium. So they benefited from the economic activity of unfree markets, even though they're a very free market. And again, that's a really good point, because we don't penalize these freer countries for the trade that they do with unfree countries. We think trade is good. So we don't penalize that. A lot of these countries that we invest in, like Taiwan, South Korea, and Chile, do a lot of trade with China. And, we don't penalize that trade at all. Okay. Thank you. If anyone has any more questions, feel free to talk to me after.
Thank you very much, Danielle and Perth. Just to let you know, ladies and gentlemen, that the next session starting shortly next door in the main ballroom is the best new ETF of 2020, the Pundit Super Bowl, always a favorite. So go and enjoy.